Welcome back to this very special Newsmakers issue. I have been speaking with Jose Vinals, the chairman of StanChart PLC. Dr. Vinals, thank you very much for your patience. Well, I want to come to India questions now. You've been a long watcher of the Indian economy. First up, would you worry that the new government that has come in with a slightly lower majority? It's dependent on allies. Do you expect it to impact growth, which has been very strong last 3 years?
The answer is no. I think that there would be a degree of policy continuity which will continue to ensure the bright prospects of the Indian economy in terms of medium-term growth. And the Indian economy has now reached number 5 in terms of the ranking of economies by total size, and I think it remains on track to reach number 3 by 2027. So I think that this is a remarkable achievement. What I would expect is that the strength which has been provided by government investment is now provided increasingly by the private sector, by private sector investment. This is something which is very important to self-sustain, the growth process. But I think that, frankly speaking, India will continue to maintain the growth rates, perhaps not as fast as in the last few years, somewhat below, but not much. So 7 growth rate economy over the next few years. And this is something which I think is very attractive for international investors.
Okay. There was this big China plus one theme. Are you seeing that theme continuing? Has it peaked off? And do you see India as an attractive destination? It looked like the bulk went to Vietnam.
Well, I think India remains a very attractive destination. And this is a theme that will continue because the underlying factors which are leading to that remain. So I think this is more of a structural trend. And India has something which is very important, which is scale. India has a very large internal market, in addition to other very important attractive features. Is a country with very strong fundamentals, very important also. Is a country where international manufacturers can benefit now from the incentives, schemes, the production-linked incentives, which are being provided by the government. So, and which has very attractive investment opportunities. For example, in the electronics, semiconductors, EVs, and then renewable source of energy. So I think that all of that bodes very well for foreign direct investment. And for portfolio investment, the fact that India has attractive growth prospects, the fact that India has been included in for example, the JP Morgan Global Bond Index, all of that again is a source of positiveness regarding portfolio investment flow. So both in terms of foreign direct investment and portfolio investment, I think that India will continue to attract significant amounts of capital, because the view out there is that this can be and will be the decade of India.
Oh, that's so good to hear. Actually, I wanted to ask you about services exports. More than manufacturing, we appear to have done well in attracting a lot of global captive centers. Is that likely to continue, or do you think that it might peak off because of worries of nearshoring, onshoring, friendshoring? Or do you think the services exports is a good story?
I think the services exports is a good story. The fact that India multiplied by 2 the services exports over the past 5 years, I think it's good. I think that the fact that half of the global business services centers in the world are located in India already makes the country a very, very significant player in the global services part. Interestingly enough, if you look at the role at the weight of India in terms of services over GDP, services over global trade, it's twice as big as the exports of goods trade. So that tells you something about that. But I think that, if India is able to now establish this stronger presence in terms of manufacturing, it is something that will be useful for the country. But I think that the strength of the services sector will continue to be immense, and it's a source of prosperity to the Indian economy, as it will be this very buoyant manufacturing, the new economy that it's sort of getting up to speed.
Okay. Well, there are two other issues of global importance, two or three issues which are knocking at our door. How do you see AI, progressing? I know it's something that we can discuss for days, but do you think it can cut off jobs? That's the big fear.
Well, I think that AI has been there already for more than a decade, this sort of traditional sort of AI,
Yes.
Machine learning and so on, and it's been applied by businesses. Now we are referring to the Gen AI, the new sort of evolution of AI. And I know that this is going to be tremendously impactful. I think that we don't know enough yet to know what are going to be the societal consequences. We know it's going to enhance productivity. What we don't know is what the impact is going to be on jobs, because productivity may come with new sectors being developed that create jobs, that replace the jobs that are lost. But again, I think that there are big question marks that are very hard to answer at this stage. What I can tell you from the business point of view is that generative AI is something that companies are looking at. We certainly have been putting some, we've invested on these to understand. We have sort of engineers which are developing, applications of these. We have done a lot of traditional AI applications in our business, but we're looking at the generative AI. And the questions are, how can you use it in order to play offense in terms of giving a better client experience, a better client value proposition? How can you use it in order to improve the efficiency of your internal processes? And how can you apply it in order to enhance your risk management and compliance, so playing defense? And how can you mitigate the risks of artificial intelligence that comes together with the opportunities in terms of ethical issues, in terms of hallucinations, in terms of cybersecurity threats? So I think that the opportunity is far bigger than the risks, but the risks need to be mitigated at the business level. And I can see an increasing amount of companies which are making or will be making use of generative AI on a very targeted basis in order to enhance their income, their profitability, and ultimately the value that they sort of create over the medium term.
I guess in your next visit to India, things may be a little clearer, and we could discuss this at length. Just a word, you were involved in climate financing, so let me touch upon that question as well. It hasn't evolved to expectation. Do you think the multilateral development banks need to be pushed? We tried to give it a G20 push as well, but climate financing is not quite evolved, especially for countries like India, which desperately need it.
Well, I think that climate finance needs to be scaled up dramatically, and this is an area where Standard Chartered is very much invested, and we are proud to be among the leaders in the industry, in the sector. And it is critical that there is a massive reallocation of capital from where the money sits, advanced economies, to where the money is needed, emerging markets and developing economies, which are also those which are most affected by climate change. And you need to make sure that the transition to net zero happens in a way which is consistent with the economic and social development of these countries. So that's the just transition. Now, we at Standard Chartered, for example, have committed to mobilizing over $300 billion for sustainable financing by 2030. We have established very, very clear targets in terms of our path to net zero, which we expect to achieve by 2050. By 2050, very far away, so we have intermediate objectives by 2030. And we are providing our clients with the technical, the professional support to help them move forward, to move downward the carbon curve. At the global level, the answer cannot come just from the private, but from the public sector, because there is not the money. You were talking about the multilateral development banks. I think that the initiatives that have been taken in order to evolve the way that these multilateral banks manage their capital, make a more efficient use of the balance sheet, all that is very good. But the important thing is mobilization of private money,
Yes.
okay, of private capital. So that's what the mission must be of the multilaterals, working alongside the private sector with players like StanChart, so that they can use the balance sheet to mobilize as much as possible of private capital, because at the end, it's not maximizing their lending, is maximizing the impact they have in the global economy. So we are a very willing player. We are engaged in these activities, in these discussions with the World Bank, with other multilaterals, and we are lending our balance sheet to that effort, as I mentioned one moment ago.
Fair point. Well, just two quick questions. One of them, you think fintech as a threat to legacy banks is over?
Well, fintech is there, big tech is there, and I think that banks have responded well to the challenge. And I can tell you some of the things we're doing at StanChart. At StanChart, for example, we are providing our own digital solutions with digital banks in Hong Kong, in Singapore. We are partnering with fintechs and big techs through alliances that help us sort of create value by combining our comparative advantages. So I don't see these as an existential threat. I see this as something that has actually shaken the traditional banks in order to be much more innovative. And now we can compete on our own, and we can also cooperate with these other players and create new things that create value for both of us. So I think this is an opportunity. We're seizing it, and we're very pleased with the results. And we're using, technology solutions for many things, for how we serve our corporate clients. I mean, we are a cross-border bank and an affluent bank. So we're using fintech solutions that we have developed internally to make sure that we are the best cross-border bank we can be, so that we help the internationalization of, for example, Indian companies and in many other countries, and that we use also fintech solutions to provide, and technology to provide the best customer value propositions to our affluent customers and to our SMEs. And so that's basically what we're doing, and we're very pleased with how this is working. Okay,
running out of time. The final question is on something related to the market. How do you see the role of the dollar? This was an exorbitant privilege it has had for a goodish bit, but people are chipping either through bilateral CBDCs, other currencies. Do you see the dollar getting at least chipped off in its importance?
I mean, the dollar will continue being the predominant international currency for a long time, but what we are seeing is the internationalization of other currencies, and particularly some large emerging market economies, which have very significant cross-border linkages and trade and financial flows with other economies, are asking the question, why can't we settle more in dollars? Why can't we more in our currency rather than dollars? And why can't we settle more in rupees, for example, or in other corridors? Why can't they settle more in renminbi? So I think that this is something which is going to gain ground over time. And I think that this is not bad, because it offers a more diversified set of international currencies. And I think that this is something which is a natural evolution of the world, where we're seeing that emerging markets are having a bigger role and playing a bigger role in trade, in financial flows, and naturally, their currencies of very important currencies or countries, like in the case of India, will become more and more international as time goes by.
Okay, that is one of the goals the Reserve Bank has set for itself in its 100th year celebration. So let's see how it goes. Dr. Vinals, it's always a pleasure speaking with you. Thank you very much for sharing your thoughts on so many issues.
Okay, thank you very much. Thank you.